Peter Lynch liked to say that it's always darkest before it's pitch black, meaning, yeah, something could be terrible, but somehow it manages to get even worse. And I'd argue that's what you're seeing with Chinese stocks right now. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. Let's dive right into all this sort of pain that's been going on with Chinese investments right now. What's going on? What's driving it down? So one, you see China's economy weakens on the Delta outbreak as they've tightened significantly based on just responding to COVID. And so they were saying that retail sales recently appeared really terrible at only 2.5% growth, which was far lower than what they were expecting. So you're seeing worsening economic data. Then you see the head of the US SEC effectively saying, look, Chinese companies need to match the rules that we've set in place. Otherwise, these companies are going to be prohibited from trading in our capital markets beginning in 2024, potentially as early as 2023. So that's the head of the SEC putting out this op-ed earlier this week in the Wall Street Journal. Then before that, George Soros came out with not one, but two different op-ed pieces effectively calling out the big risks that Chinese investors face. And then he called out this specific excerpt on China's Evergrande, which we're going to talk about in 1 second, how China has enjoyed an extended property boom over the last 2 decades, but that is now coming to an end. Evergrande, the largest real estate company, is over-indebted and in danger of default. This could cause a crash, and this is causing a lot of folks to wonder, is this potentially a crash scenario for China? Are they facing a potential Lehman Brothers type of crisis? And I'll talk more about that very particular development in just a second. So why is this all happening? So one should take a step back and recognize that Chinese regulators said, you know what, the property development sector was getting a little too hot. So they sort of came up with some rules, effectively financial regulations, reacting to the hypergrowth in the property sector, these 3 red lines of what financial compliance is expected for major property developers, effectively saying, look, here it is, you need to be able to meet very basic debt to equity, debt to asset approaches. You can't be over levered. If you have too much debt relative to your assets, that's going to be a problem, and we're not going to allow you to borrow more. Once you hit these sort of regulatory thresholds, yeah, you're going to be stunted from growth, and you're going to have to sell off properties in order to sort of be in compliance. And this creates obvious problems because then anyone who's crossed these red lines now becomes a forced seller. And that's exactly what you're seeing, as you've seen all these different property developers that are either red, meaning they've crossed all 3 red lines, or they've crossed one or both. So here it is, China's Evergrande, which is the second largest player. Here it is with 800 billion in terms of liabilities, 800 billion RMB in terms of liabilities. And so this is a big, in terms of total debts. I'll get more into the specifics of their debts versus liabilities in just a second. And so here it is. They are the biggest player by far in terms of this list that you're seeing of just, yeah, they're going to be a forced seller, and they've been a forced seller for months. And so here it is now, very recently announced that they effectively turned to the same advisors that aided Lehman Brothers, Noble Group, and Luckin Coffee to effectively say, hey, we need restructuring experts. We need, Houlihan Lokey to help us deal with this problem, because this is a big red problem. 3 red lines that, we need to pay down debt, and in order to do that, we have to sell properties. But this creates a death spiral, because if everyone knows you need to sell off properties, they're going to say, oh, I'm going to be able to get a better price. So in sense, this is a little bit of a self-inflicted regulatory wound, but it does create very real problems. And they talked about, as they announced that they were hiring these restructuring experts, that, yeah, we've been selling properties month after month, but here it is, June, July, and August, the amount they sold was 71 billion RMB to 44 to 38. That's a huge declining trend. Why is it declining? Especially when September is supposed to be a month when real estate companies in China record high contract sales of properties. So here it is, they're announcing a low in September versus the high that they would expect, and that's because the ongoing negative media reports concerning the group have dampened the confidence of potential property purchases in the group. I mean, that makes a lot of sense, because you're wondering, well, wait a second, will they have the funds to finish a project? Why would I want to invest with them? And so this does create this sort of reinforcing death spiral of, like, I know you're not in compliance, you're going to need to liquidate assets, you're in a tricky spot, you depend on the kindness of strangers. This is a traditional death trap, death spiral that you see with companies where you have this asset liability mismatch. And Here it is. They also announced, along with effectively hiring a restructuring advisor, that they're not going to be able to pay interest next week. That's around $90 million. And this does start having real concern, because $90 million in interest payments against lots and lots of billions of dollars. If you look closely, I mean, they have several different bonds that were issued in US dollars, 12% bonds, nearly 14% bonds that were issued. They are all these bonds are trading at pennies on the dollars. Investors are not expecting to get paid back. I mean, there's effectively the assumption that you're going to have a 75% haircut on some of these things. So this is world of trouble that you're looking at with Evergrande. And so here it is. Does Evergrande pose systemic risk? And that's the big question. Here it is. Global Times, China's mouthpiece, saying no. This doesn't pose systemic risk. They won't change their housing regulations. I actually come from a different mindset, saying, well, wait a second, let's actually see if this poses systemic risk just based on the sheer size of it. You look at it and you look at their most recent balance sheet, June 2021. Here it is, around nearly 2 trillion RMB. That's the equivalent of $305 billion in total liabilities, against also about $90 billion in debt. So you have liabilities, of which $90 billion are these fixed income, effectively, obligations. And so this does make folks wonder, like, well, wait a second. Okay, so you have $305 billion liabilities. You have $90 billion, very strict in terms of financial debt, financial obligations. And why can't you just default on these obligations? Like, why can't they just wipe it out? And, what's the problem with doing that? And here it is. You can see in the China Evergrande headquarters effectively unrest as investors storm the headquarters chanting, return our money, because they have been buying into the Chinese Evergrande properties. Here's one woman effectively berating the CEO, saying, if they don't give my money back, I'll jump off a tall building. She's talked about how she sold all of her properties to buy into the Evergrande property developments, and here it is. It might get wiped out, or see a significant haircut, or her personal interest will see a zero. And so you're seeing a lot of retail, but it's not just retail investors that face getting wiped out. And that does create a death spiral of its own, because these folks are probably expecting that income, and they have that income, then they're going to spend on other things. So no wonder why the real economy is starting to take a hit. But you're also going to have banks, and those banks are going to say, well, wait a second, we lent to Evergrande. Evergrande's liabilities is someone else's asset. And so you can't just cut that without other players saying, well, wait a second, now we don't have these assets, we still have our liabilities, and on the death spiral goes. And so this does potentially create really big problems. So then the question is, well, wait a second, is this Lehman Brothers-esque problems? And I was just talking about how they have $305 billion in liabilities, about $100 billion in debt, a little under $100 billion. That's in dollars in debt. Here's Lehman Brothers in terms of their financials in 2008, 2007. You can see that their total liabilities was a little north of $600 billion. So this is effectively half Lehman Brothers. So do you think half Lehman Brothers could potentially lead to a big problem? Yeah, Lehman Brothers did have different types of relationships, as it was, you might have derivative contracts and, working with the, exchanges with a lot of different banks. But I think you do have a lot of banks that were providing, loans to Evergrande that are now going to be facing a haircut on their own balance sheet. And thus far, they won't be able to make new loans in the future. So that does create credit problems where the economy grows a lot slower, if not contracts. And so, in full disclosure, as I've already mentioned, I do own a basket of stocks, of Chinese stocks. It's about 25% of my portfolio. It's almost predominantly in the Hong Kong shares. I'm currently sitting tight, focusing on the compounding. But I got to say, this does create really big problems. And I think it's appropriate to say, buckle up, folks. Like, this could be extremely painful. So when does the pain stop? And so my view is the pain stops when effectively regulators go from this is not a systemic risk to, okay, this is a systemic risk, because we see that, yes, Evergrande selling properties is forcing these other folks to also now sell at a haircut. And if they're selling at a haircut, does that affect their own liquidity? Does that affect other folks forcing to sell? So you do have sort of this death spiral until you have the central bankers step in and say, you know what, enough's enough. then you're going to be in a world of pain where things just continue to tighten. So I think investors around the world now are focused on what is the People's Bank of China going to do and when are they going to react. Now it should be called out that so far since, let's say, COVID started, the reaction from the People's Bank of China has been fairly minimal relative to what the U.S. government has done in terms of the Federal Reserve, where they have just gone crazy. I mean, the U.S. Federal Reserve has been an extreme reaction, creating effectively 120 billion in liquidity a month, and now they're just saying, oh yeah, we're going to be tapering that. We'll be slowing that down over time. So I think these are real concerns to consider, and I think the age of watching what are the central banks doing is as important as ever, as you look at this, because the reality is that at this point, a lot depends on what does the leadership in China consider doing. I mean, this is, Chinese stocks have been in a world of pain recently because of the regulatory concerns. Then you see the SEC, you see the economy tightening. Now it is, you have a Lehman Brothers-esque moment going on with China, and so it's sort of saying, okay, so what happens from here? My take is that it depends on leadership. Will the People's Bank of China step in and say, you know what? Will the regulators say, you know what, enough's enough? We're going to set some sort of backstop. We'll create a good bank, bad bank, and figure out a solution to this. Or do you let sort of market forces just spiral out of control? You let that happen, and you have really, really bad scenarios. So I'm watching that. Regular investors. If you're interested, to follow my personal journey, go to unrivaledinvesting.com. Click on Journey. First week of the month, I call it my full portfolio. By the end of the month, I call it potential multi-bagger. On our exclusive Discord, where I'm interacting with the Unrivaled Nation on a daily basis, I do update sort of what I'm thinking about in terms of trades and how I think about these risks. And so investors do know how I'm considering hedging various different China risks. So that is something that I do consider. But if that's of interest to you, go to unrivaledinvesting.com. So yeah, this is a very tricky situation that's going on in China right now. A lot depends on the leadership. If this video talking about the Lehman Brothers-esque crisis that is going on in China right now, Evergrande, if this has been helpful for you, please make a point of hitting that subscribe button, hit that thumbs up button. Thanks so much for watching.